podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness. Welcome to this week's edition of the Hedged Edge. I'm your host, Jeff Eisenberg. If you're an investor, grain trader, farmer, merchant, or even just interested to know how ag profits are really made, today's episode is for you. We're joined today by Elaine Kub, author of Mastering the Grain Markets. She's a former futures broker, a market analyst, grain merchandiser, and a farmer. Elaine's expertise in the industry, combined with her book, has her referenced as one of the top voices in the industry, and a fun one to follow on Ag Twitter as well. We're excited to share her knowledge with you on this episode. Thanks for joining us, Elaine.
Well, thank you, Jeff. This is exciting, and that was a really kind introduction.
Well, when I first get started with these, it's always my first question to dig into your bio, your ags, your Twitter sphere, and everything, and figure out a little bit about you. And you say that you are a Peacock Wrangler. We have to know, is this an official sport? Is it something that you've, kind of done on your own, or do you have friends that do this as well? What is a Peacock Wrangler?
Well, I just needed something for the alliteration because I think my Twitter bio says data wrangler, cattle wrangler, and peacock wrangler. And the data wrangling and the cattle wrangling, like that, everybody understands what that means, right? Yeah. But I have one peacock. I used to have more peacocks, but then they kind of died off. We got one peacock, and his tail is getting bigger because it's springtime, and he's very pretty, but it's just the one. I don't do a lot of wrangling.
Right. Okay. Does he live in the house, or is he?
He's got his own kind of peacock palace.
Okay. I can't wait. So this is great. So you grew up in South Dakota. You moved to the cities, and now you moved back to the farm, the family farm, and. Tell us where you.
That's right.
When I first started listening to your book, I got to admit, I listened on the Audible versus reading. My daughter was really upset that I wasn't taking the time to read every page. So I said, listen, I'm taking you to sports practice. We're doing all these things. I'm going to listen to it on 2 times speed, and it's just going to go great. And she just kept looking at me like, Dad, you're crazy. But anyway, at the very beginning, it talked about you picking up rocks out of the family farm to start the beginning of the year and the harvest. So you're back picking up rocks, or what's going on now? You're living in South Dakota. You're farming.
Yeah, I mean, at some point, I was working from a home office in Omaha, and I thought, well, we have internet in South Dakota. Why don't I just go back there? Because there I can have a peacock. So here we are. But yeah. you mentioned the rocks, and the first part of the book does start with a story about arbitraging rocks, right? That they are abundant here, where the glaciers left all these rocks behind, sort of glacial erratic rocks everywhere in South Dakota, and that you could sell them. Not here, nobody would pay for them here, but you could sell them to somebody in a city. In theory, I thought, but I actually just learned that a neighbor of mine made a business. I don't know how much money, like a lot of money, made a business packing up rocks into boxes, the priority mail, the flat rate shipping, and selling them on eBay. And people paid, $50-$60 for a rock to put into their garden. So that's a thing that actually worked.
That's a thing. Wow. That's impressive. If you would have had the foresight as a young child, I mean, just think.
If we'd had eBay back then.
Yeah.
If only.
Right. Very cool. All right. So you're back now, and are you farming full time, or what's your day-to-day today?
Day-to-day is, we have cattle. So in the winter that requires day-to-day stuff. And I do farm corn and soybeans in the summer. But no, most of my day-to-day stuff is economisting sort of things.
No. Perfect. Well, like many people, we have office there in South Dakota as well. And most people, while they're working, they also have the farm in the back of their mind. So we understand that and actually greatly appreciate it. So thank you for doing all that work. So let's just kind of jump into the book here a little bit. First of all, I gotta say that I truly enjoyed it. It was all that I could really think of by the end was where's the sequel, right? At the end of the day, where's the sequel? You need to maybe think about some like grain traders that you could interview that have leveraged on your information that you've shared and gone out and been successful. We actually did a through our
I'm
sister.
writing this down, Jeff.
Yeah, write it down. It's fine. We'll help market it for you. We did through our sister podcast, The Derivative. We actually interviewed Jack Schwager and also Jim Rogers, and they did some. Obviously, Jack has interviewed traders. So, anyway, I'd love to hear. How you've heard, what people you've heard back from that have read the book, and kind of what has been their feedback to you.
Yeah, I do hear from people who have read it and used it. People who have encountered it perhaps in an introductory ag econ class at their university where they're studying ag econ. And so I love that because I think it's a lot less dry than most textbooks. That's my intention. So I'm glad that it's used in that way. And people who use it when they first get a job at a grain merchandising company, the big ones, Bunge, ADM, Cargill, I know that these folks are using it, and this is perhaps their first introduction to some of the vocabulary of what they'll be doing every day. And so I love hearing that. And I hear from really random people who use it perhaps as an introduction to, I don't want to say day trading, but trading futures as an alternative investment. The one that sticks out to me is somebody who was a cellist. So a famous concert cello player sent me a really nice email about how much they enjoyed the book, because I think when he's not practicing his cello, he appeared to be trading. So yeah, I mean, it really surprises me how far geographically across the earth it has spread, and just what kinds of people it could be. Anybody could find this interesting, and that sort of was the intention, right? That anybody who eats food should care about agriculture commodities and their pricing and the markets that go into them. So it should be interesting to everybody, and perhaps more interesting to people who are really doing the practicing.
Yeah, absolutely. And it's one of those things, once you get involved in agriculture or you start to study it or even read your book, can imagine, whenever you get up in an airplane, you look down across our country and all you see is grain fields. And it's whether it's a square or a circle or whatever it might be, you start to track the rivers and how it flows. Again, maybe I'm just a nerd when it comes to this stuff, and that's what I'm thinking about, but it's real. It's a vast majority of our country's land is used for agriculture. So
yeah, well, and not just grain production, but livestock too. You talked about the sequel to the book. The sequel has always been in the back of my mind that I need to do one for the livestock markets, and I haven't made it happen yet, but I probably will, Jeff. I probably will. But you're right that when you think about physically, what is out there, the great prairie of North America, to the extent that it is still prairie, that's used for livestock production, for agricultural production. And the prairie that has been transformed into a different kind of grassland, corn production or soybean production, that also is part of that legacy. That is the majority of what North America is designed to do.
Yep. Very cool. Well, if you get into that livestock one, I know a few guys that would love to participate. So just let me know.
Super.
Okay, so this is the part where if we were on Jimmy Fallon, we jump right in. We tell a little bit more background, ask a question, then we do a skit, or show you a clip. But since we're only on a podcast, we just get to talk about it. One area of the book that I found really interesting, maybe it's because of the times that we live in, the way in which markets have traded over the course of the last 6 and 12 months, is your reference to forward pricing and future, really hedged to arrive contracts, and some of the basics that farmers can use to protect themselves by locking in some of the futures prices today. Could you maybe just elaborate a little bit on some of the different options that your family and your farm have used, or others that you've consulted with are kind of most frequent with? Obviously, futures and options as well. So.
Yeah. In fact, Jeff, this is a really prescient time to talk about this concept because, as you know, the price for old crop corn is very different than the price for corn that is going to be planted in the next couple of months and then delivered to the market in October. If I look right now, physical corn today is worth about $5.30 per bushel. That's the average cash price in the countryside. And that sounds great. That's actually historically a really nice, profitable price. But a farmer who would want to lock in a price for this upcoming year's grain can't get $5.30 per bushel. He can only get $4.68 per bushel. And that's because of the constraints of the space-time continuum, right? That corn that is demanded right now the grain that has not yet been grown cannot be used to deliver against today's time frame.
Right.
So that does influence what tools you use. You asked about the tools. If somebody did see that $4.68 for new crop grain, this is the easiest part to think about. What can they do to lock that in? And that's not a bad idea historically. That again is a profitable price. So you might want to lock that in before the price goes down, before you lose this opportunity. And you can do this in a couple of easy ways. You can just go to your local elevator and sign a contract saying, I will deliver to you X amount of bushels of corn at $4.68 per bushel. That's the easy thing. But it gets a little fancier if you decide to do something like have your own futures or options hedge, which would involve opening up a brokerage account with you guys and and paying some margin and having that flexibility. The reason why you would do that is that it gives you the flexibility to get back out of that contract or to decide where you want to deliver the corn when harvest does come around. So you're not locked into a specific elevator or a specific buyer. The buyer might not be there. In the bad old days when some ethanol plants went bankrupt, that was a concern that people had. Hedged to arrive contracts are sort of a different beast, but they have some of those same concerns about the counterparty risk of just signing a contract with one specific buyer that locks you into some counterparty risk. And it also locks you into this risk of 2 different crop years having very different supply and demand scenarios, because that's what we're experiencing now. The grain that was grown in 2020 has a very tight and very exciting, very bullish supply and demand scenario. And the grain that is going to be grown in 2021 also has a somewhat bullish supply and demand scenario, but not as crazy.
Right. There's still unknown. We've got the big planting report at the end of the month to determine, how many acres are actually going to be planted. We've got difficult weather in Argentina and Brazil causing for drought types conditions. And then the unknown as to what's going to happen in the US, right? So all of those are near term Brazil and, export demand from China. Long term, we're looking at an unknown amount of crop that's yet to be grown in the United States, as you described.
Yeah, so it could very well be the case that by the time December 2021 rolls around, it's above $5 too. I mean, I don't know. We can't predict the future. Neither of us have a crystal ball here. But what's interesting is that structure to have the prices higher today than they are 6 months from now. That's very unusual, right? For an annually produced commodity, typically there would be a carry structure where the prices today are slightly less than the price 3 months from now or 6 months from now. And that reimburses the owners of the grain to store it for months at a time, because that costs money, right? You have to have some energy and labor costs and insurance costs and deferred income costs of storing something. That's the way things usually work, and that's contango, right? And all this is in the book, and it's all, what I know very well, but we'll just walk through it a little bit because it's interesting right now that the grain markets, the corn market specifically, is not in contango, and it's rare. It's in backwardation. So it's worth more now than it is 3 months from now. And that means that the market is signaling it needs that grain now. It doesn't want the owners of it to store it for 3 months. They want to bring it to the market now. But the challenges for a grain marketer then is like, what can you do? You want to lock in this price today for grains 3 months from now, but that price won't be there. And I just walked through this with a producer a couple of weeks ago. He's like, how can I do this? Can I put on a futures head and roll it down and pick up that roll? But it doesn't work that way. It's the opposite. You're going to get killed on the roll. If you
Right. This year,
sell,
there's no roll yield, right?
right, it's negative. You'd get killed 18 cents. You'd be locking in an 18-cent per bushel loss for sure, because every time you had to buy out of the high price contract and sell into the low price contract, you're locking in a loss.
Now, the one part of the trade, so there's two parts to every grain trade, right? There's the futures price and then the basis price. And I think a lot of people in the country that I talk to are always most oftentimes fixated on that fixed price or the flat price. But the reality is, in scenarios like this year, you can put on your forward hedge for your futures contract and then adjust your basis trade or your basis price at a later date. So two things. One, if you just, from your perspective, give that outline. And then two, I'd be interested in your feedback on the different entities. And you don't have to name any names, but there are now other entities that have entered the space. We used to have the A, B, C, and Ds that offered these types of contracts, ADM, Bunge, Cargill, and Louis Dreyfus. But now we've started to make it more accessible for mid-size and smaller merchandisers and elevators to offer these hedge to arrives, and then you also discuss designer contracts in your book. So the question is, one, what's your experience in terms of the near term use of those tools? But then two, how are more and more people going to be able to access these tools moving forward?
Well, I'll be honest that I think I've been hearing some hesitancy from the farmer population for any of these accumulator contracts or designer contracts, let's call them, in a year with high volatility, specifically because they've been burned on those accumulator contracts in the past when there is high volatility, when prices do move up or down and the underlying puts behind those accumulator contracts get triggered and they end up committing more bushels than they had originally intended. Right. So there is, I believe, some hesitancy specifically in 2021 because of the anticipated high volatility in these markets. And honestly, because everybody is so bulled up right now, I doubt that there is very much pre-harvest hedging really going on in the typical seasonal pattern that you would expect to see in February and March when folks are locking in prices using any sort of a contract, an OTC contract, hedge to arrive contract, accumulator contract, anything. I bet less of that is happening right now than you would usually see this time of year because everybody is so bulled up about not only the price references that we're seeing for old crop grain, but also legitimately the drought that is ongoing in the Western Corn Belt. So they're out there, but I think right now farmers are hesitant about them, and some of them have been burned in the past in years with high volatility.
Yeah, we agree. I mean, it's if you follow the herd, oftentimes some people are willing to step away and say, hey, if everybody's going one direction, I need to go another. But you're absolutely right. I mean, many people are just kind of hands in their pocket, waiting to see what's going to happen. We've actually advised people in general as well, like, look, the option volatility premium is so high in the market to pay up to own puts or calls it's going to be expensive. So you need to come up with a strategy that is going to protect you, that isn't necessarily going to take away all of your profitability from these price levels. So
which some spread trading could do, right? I mean, if you're a seller of that volatility, then you would get to benefit from some of that high pricing. Which I'm not in the business of advising people to trade options or not to trade options. But yeah, I agree that there's definitely strategies you could use right now.
Yeah, it's last year they got burned by them, but now with higher prices and higher volatility is the time when you actually should be thinking about engaging it for maybe even a small part of your crop. No one's ever going to advise doing 100% of anything. So it's step in incrementally, monitor the markets, see where they go. We've got this planning intentions report. I think it's going to be a blockbuster. We're going to actually do a podcast that afternoon to kind of recap that report and it's I think it has a chance to see some really big moves one way or the other.
Yeah, the other big argument I would put towards using an independent futures or options hedge in 2021 kind of goes back to 2019 when where I am in South Dakota and lots of places in the Corn Belt had a bunch of prevented plant, and so you
Yes.
ended up not having enough grain to deliver, and you had to buy out of if you had forward contracts at the elevator, you had to buy out of them, and that is a disaster. That is never a good scenario to be in. There could be any kinds of punitive fees from the grain company, from the elevator to get you out of a forward contract at a specific location versus somebody who has an independent futures or options hedge. You can get out of it no problem. It gives you a lot more flexibility if the market's conditions change, which they certainly could change this year.
The next kind of segment here is take a look at some of the market outlook from your perspective. You do a lot of writing and educating, and so I guess I'd like to get your take on this reopening trade as it relates to the movement of commodities and this potential inflation trade that everyone is talking about. I hate it when Goldman Sachs tells everyone that commodities are going to the moon, because again, I'm a natural pessimist when it comes to those things, but love to get your take. I mean, are commodities going to the moon and back, or are we're going to see some measured inflation?
Well, what's the word? Super cycle. That's the thing that you see in all the headlines,
Yeah.
right? This commodity super cycle. Well, those did exist in the past, right? In the 70s, 80s, and even specifically in 2008. So that was right when I was getting into the business.
Yeah.
I came into the business right when corn was like sailing past $5 because of the ethanol boom and because of the legitimate sort of commodities super cycle based on China all of a sudden buying and building their economy. And there was a real structural reason for it, a real global structural reason for it.
Right.
In 2021, there would be a real structural global reason for a small bout of inflation to uh, uh, to reflect the new supply of money, right? But there's not a bigger structural change in the overall global economy that would drive a commodities super cycle. So in the near term, yeah, I think prices are going up because it's a bit of a self-fulfilling prophecy. Everybody expects to see commodity prices go up a little bit.
Right.
But longer term, I think it's not. I don't believe in the idea of a commodity super cycle at this moment in time.
That's a great perspective. There are some people that are looking at China again as related to their feed and their feed demand. There was a massive outbreak with the ASF, Asian swine fever, that took down large majority of their hog herd that they've now been rebuilding. And during that rebuild process, they've shifted from feeding swine, or feeding swill, which was garbage, to their pigs that spread the disease, to now more organic or naturally grown proteins like U.S. corn and beans. So
yes.
To your point of a big change in economic cycles and China, that might be the question. I guess back to you is that enough, or is that just going to kind of put a floor underneath the markets?
No, that story is important, and that's real, and that's true for U.S. corn, U.S. soybeans, U.S. sorghum, U.S. any feed grains, any Western Hemisphere feed grains. Yes, that is a big structural thing, and it'll last, and I'll come back to that. But I'll reiterate that I don't think it's true for commodities writ large, right? In fact, China is, I think, pulling back on some of their iron and steel production.
Right.
They're not rebuilding in the way that they were building in 2008. But the ASF thing, yeah, is super interesting because they lost 40% of their herd, and they now have a specific intention to rebuild that herd, but it's not happening overnight. In 2020, they only rebuilt 14% of their swine herd. So this will be an ongoing story through 2021, through 2022. I don't know how long it will take. And in fact, however long you think it's going to take, it's going to be longer than that, because now I think there's these new variants of the ASF that are going to, diminish their ability to rebuild that herd as fast as they would want to. But you're absolutely right that as they do it, the government is encouraging, big concrete barns, confined animal feeding operations with feed mills attached that do need, as you say, standardized commodities, number 2 yellow corn, soybeans. That's exactly the kind of thing that they're needing now to rebuild the herd in this new and more modern way. So absolutely, this is a story that will affect global grains and oil seeds for the next several years.
And yeah, and that kind of is a great segue into the next section I had, which is really, the future and game changers in agriculture that you see kind of coming up down the pike. It was at the end of last year. I had a guest, Scott Irwin from the University of Illinois. I don't know if you follow Scott.
Yes.
Yeah, so Scott joined us on the podcast, and it was a great discussion. And I asked him, the biggest change that he expected to come, and he mentioned autonomous vehicles. And in your book, you also touch on that. You touch on precision agriculture, and then the potential for automation. And what I wonder is, one, what do you think that the biggest changes are going to be? But related to automation, I had this thought that what happens if Bill Gates or some other large investor decides to go buy land all across China, or maybe not China, but maybe India or Africa, but the Chinese government just takes land and says, I'm going to make as much corn here as possible, and to do that, I'm going to do automation. So I wonder if China battles back to the fact they're buying so much corn. What are they going to do? So
yeah, that's a huge threat, because there is so much potential for greater efficiency in the land use in China and Africa specifically. I mean, so much of that land is fertile, but is just not using the production practices that are optimal at this point.
Right.
So you think of any time that there has been a commodity shortage, or prices really spike, and do everybody think, oh my God, this is the end of the world? What always happens to change that is technology, right? Fracking, when we thought we were going to run out of oil, right, and then we get, suddenly there's more oil. So yeah, oh my God, we're going to run out of grain by 2050 because China's eating all this grain. What will change that? Absolutely technology. And you're absolutely right to point out that you don't even need to invent autonomous vehicles to get that technology change. You just need to implement the existing technology, right, in a broader geography. So yeah, huge threat. But here in the United States or North America, the autonomous vehicles thing, that's fun. That's a technology change that is not a threat. That's a big opportunity for us when you think of actually the big constraint. And this is not even primarily true for commodity grain production, but for specialized vegetables, but labor, right? Agricultural labor is a huge problem, and it's a problem even for corn and soybean production. And if you could just deploy an autonomous drone grain cart rather than having to pay somebody $20 an hour to go do it when you can't find anybody to do it, that would be a huge help to us here.
Now, since you're out on the farm, what do you think the mentality of your family would be? Are you willing to hand that transfer of power to the vehicle, or are you still want to be out there and in the cab and running 20 hours a day or 24 hours a day and harvest?
Yeah, I think it would vary. I'm trying to think of my neighbors and just everybody I know, and I think it would vary. The adoption rate would vary. But I went to a great conference up in Edmonton, Canada, a couple years ago, back when we had conferences, right?
Oh yeah, right. Yeah.
Farm
Normally
tech.
we could actually, shake hands, we get in a room. Allie would have lights up for us.
Oh, yeah.
This is fun though.
Yeah, it's convenient. But no, there was a lot of talk about this at Farm Tech, about the idea of like, would you really do this? And obviously the big block at this point is insuring these autonomous vehicles. How are you gonna do you really trust it not to run over a small child or run off into the street? But if you could solve that problem, I think the willingness of the farming population, specifically the younger farming population, is high. I think people would be very happy to adopt autonomous vehicles.
Yeah. So from your perspective, what else do you see coming down the pike in agriculture that might be, a game changer for either yields or, more advanced technology? What do you think is the biggest driver coming?
Well, and I don't have any expertise in this, and I don't even, I've kind of like dread talking about it. But I think, in the next 4 years of the Biden administration, let's say, the idea of how is farming going to play into the climate change story? Are we going to be paid for our carbon capture? How are we going to quantify this? I think that could be changing, the balance sheet of a farming operation if they have to start or if they have opportunities to start being paid for that. And on the flip side, what if what if they are legislated where they have to start does everybody have to fill out an ESG report, every individual farmer? At this point, that would be nearly impossible to do, and no one has any inclination to do it. But to what extent could they be made to do it? That's a thing that is, both an opportunity and a threat, I think, for farming.
Yeah, that'll be a really interesting story to follow as well. Yeah, the carbon side is super interesting. People not trading carbon credits. Who knows? Speaking of trading, I have to ask, you wrote an article for DTN about the Robinhood traders and their ability to drive commodity prices just like they did GameStop. And, is this even possible? Or are they going to band together and next thing you know, we're looking at $20 corn, or what are your thoughts?
Well, this is the worry, right? I mean, this was the big fear when this happened to GameStop, and everybody who's got a corn position on is like, "Oh God, are they coming for us next?"
Right.
Well, I don't. At this point, they don't have any real reason to come for us, but they came for silver, right? The retail folks on Reddit all decided that they were going to try and do a short squeeze on silver. Well, good luck, because silver is a humongous market. But they could get access to the silver market through silver specific ETFs, like you mentioned. Correct. So that was the mechanism. And technically, that same mechanism does sort of exist in the agriculture commodity space, because there are some broad commodity ETFs. And in fact, there's a corn ETF.
Yeah, there's very specific commodity ETFs. Now, I don't know what their limits are or if they have, position size. I haven't looked into them to know, but.
Well, as they exist right now, they're very small in comparison to the actual commercial positions of the grain trading firms that have, short hedges on grains. I did the math, and just looking at the broad-based commodity ones that were available to trade on Robinhood, it was less than 1% of the total open interest. Obviously, comes from these ETFs. And the concern would be not for corn or soybeans, are the really big ones, but there are a few of these agriculture futures markets that are pretty thinly traded. So you've got oats or even feeder cattle to some extent.
Perhaps, yeah.
Cotton. So some of these markets are thinly enough traded that you could potentially get enough people banding together to cause some mischief. But the difference is that they would have to, open a brokerage account and pay margin. Like, there's no such thing as a $0 commissions, unless you know of any $0 commissions.
I don't.
Yeah, I don't know of anybody who lets you just trade commodity futures and options with $0 commissions and no margin. So it's much less of a threat for these markets than it is for penny stocks.
And I think the other thing is that the CFTC and the regulators have implemented position limits in these markets. So, I know they just increased the position limits in many of the agriculture commodities, but by design, they are already set up to be in a position where no one single entity can control the market. I mean, listen, we've all seen the movie Trading Places, and the Duke brothers had the orange juice market cornered, but that's not reality. You can't really do that. So.
Yeah, exactly. The even the margin positions, the margin management, all of that exists for this very reason, to keep to keep this kind of mischief from happening.
Very good. Well, this has been a lot of fun, Elaine. I do have last few, we call them fast facts or fun facts, questions that I want to run through with you, rapid fire ones. And so I guess the first one, I think I already know the answer, but it's worth asking anyway. If you could farm in any place besides the U.S. and in South Dakota, where would that be?
I am tempted to say either Ethiopia or Ukraine. What did you
Wow.
think I was going to say?
Well, I was thinking that you mentioned Africa, so I thought maybe that's was going to be your go-to. But yeah, Ethiopia, yeah, Ukraine, places that are dying for food. If you could help those people, that would be amazing.
Well,
right?
listen, I was not thinking unselfishly at all. I was just thinking, man, they have really excellent fertile land. Like you could grow great crops there. But you're right. It's, humanitarian too, maybe.
Yeah, save some people. That's a good idea. Yeah. Okay, so I gotta ask, if you could go hunting for a week or to the beach, where'd you go?
The beach.
I had to ask. Like I say, you're up there in South Dakota. I know a lot of people up there, and the answer is, most of the time I'm gonna get hunting.
Yeah, I know. It's not as novel for me, I guess. The beach is more of a novelty.
That's good. Do you drive or fly if you had to go right now?
Right now, today, drive.
Yeah.
I like driving. I like a road trip.
Yeah, it's a haul to Florida, but once you're there, you're there.
Yeah.
What is your favorite extreme sport that you've ever done or would do in another life?
Well, I used to take flying lessons, and that's not really an extreme sport.
Oh, I count it. Yeah, it counts.
Okay. Yeah, I need to get back into that.
Like, was it single prop planes or what were you doing?
Yeah, a little Cessna. I guess that is pretty risky.
Yeah, watch out for the power lines. You got all sorts of things going on. Yeah. All right, that's good. And so when can we expect the next book from you, though?
Well, they take some time to churn out. So, and so this has been the Mastering the Grain Markets came out in 2012, and it's been updated into all the changes that have happened to the market since then. Good. But that's coming up on 10 years, and obviously it's taken me this long. So I don't know. Don't hold your breath.
Okay. All right. Well, in the meantime, where can we find more information about the book? Where can we buy it and get in touch with you?
Yeah, it's available, on Amazon, anywhere online, your bookstores. I also have a website, ElaineKub.com, that can take you to these places that will sell you the book. But the best way to keep in touch with me, of course, is just look on Twitter. I am at Elaine Kub. Kub is spelled with a K.
That's great, Elaine. We'll add that to the show notes and really appreciate you taking the time today. And we'll get those links out there. And hopefully people reach out and get some more of those books on their desktop.
It does make a nice desktop prop.
Yeah, I got mine right here.
Me too. Yeah, great. Lovely. This has been a pleasure. Thank you for this conversation.
It was great, Elaine. Thank you so much.
You've been listening to The Hedged Edge. Links from this episode will be in the episode description of this channel. Follow us on Twitter at ag_RCM, like our Facebook page under RCM Ag Services, and visit our website, read our blog, and subscribe to our newsletter at rcmagservices.com. If you like our show, introduce a friend and show them how to subscribe. And be sure to leave comments. We'd love to hear them.